What's up, everybody? Welcome back to the channel. Let's get real for a second, and I want you to be brutally honest with yourself. Most traders are completely lost when they open up their charts. You sit down at your desk, you open TradingView, and immediately you are jumping back and forth between the 1 minute, the 5 minute, the 1 hour, and the daily charts, desperately guessing which time frame is the right one to use. Honestly, it's completely killing your win rate, and it's costing you serious money. Choosing the right time frame is absolutely critical to your success. If you do not understand which time frame to choose or which type of frame is right for your specific trading style, you cannot advance your trading career. If you don't nail this down right now, you are going to struggle to become a consistently profitable trader. But don't worry, take a deep breath, because in today's video, I'm going to show you exactly how to cut through the noise. I am going to tell you exactly how to choose the right time frames to spot the absolute best, highest probability setups. So let's dive right into the video. The method I use every single day in my own trading is called the top-down approach. Just like the name sounds, we are going to first look from the top, starting from a macro or higher time frame to get a massive bird's-eye view of how the market looks. Once we understand the big picture, we are going to drill down step by step to pinpoint our exact entry. Let's break it down into 3 simple steps. Step number 1, the daily chart. First things first, we pull up the 1-day chart frame. When we are on this higher time frame, we are looking for 2 very specific things. Number 1, we are trying to identify the overall macro trend. Are we making higher highs and higher lows, or are we in a massive downtrend? Number 2, we are trying to find our major rock-solid levels of support and resistance. We want to know exactly where the market is historically bouncing or where it is breaking down. Think of the daily chart as your compass. If you don't know where the daily chart is pointing, you have no business taking a trade on the smaller time frames. You need to know if the broader market is at a critical crossroads before you do anything else. Step number 2. The 4-hour and 1-hour charts. Okay, so we've mapped out our major daily levels and we know exactly what direction the overall trend is heading. Now we shift our focus and drop down to the 4-hour or the 1-hour time frame. Why do we do this? Because within those massive daily trends, there are smaller localized battles happening between buyers and sellers. Here on the 1-hour and 4-hour, we're looking for those localized, shorter-term support and resistance zones. This helps us figure out the immediate direction of the trend for the current session, and it shows us where the market might hit a speed bump during the day. Once we identify these smaller crossroads, it helps us formulate our actual trade idea and identify the specific trade we want to take. Step number 3, trade execution. This is where the magic happens, guys. Now that we have our trend direction locked in and our key daily and hourly levels drawn out on the chart, it's time to shift down to the 15-minute or the 30-minute chart. Personally, I absolutely love the 15-minute and 30-minute charts, especially if you are trading Forex or if you are trading crypto. Why? Because they provide a highly stable environment. The 1-minute chart is full of fakeouts and noise, but the 15-minute chart is incredibly reliable for identifying your exact entry rate and executing the trade perfectly. On this 15-minute chart, your only job is analyzing the price action. You're looking closely at the chart to see if a specific chart pattern is forming. You're waiting to see if your favorite candlestick setups are appearing right at those support or resistance junction points we drew earlier. Whatever your specific trading strategy is, this is the exact moment you apply it. Now, I use a very specific, highly tested strategy for this exact execution phase. I rely on the absolute best study of price action for my entries. If you guys want a dedicated full-length video breaking down my personal entry strategy, let me know down in the comments right now, and I will make that video and give it to you guys. But for now, the most important key is that you stick to your strategy. You must follow your discipline, and you must always calculate and maintain your risk-to-reward ratio before clicking that buy or sell button.
I actually just dropped a highly detailed video discussing proper lot sizing and exactly how to maintain your risk management. So if you haven't watched that yet, you definitely need to go check that out right after this one. Listen to me closely. If you trade like this and you apply this top-down approach every single time you open your laptop, you are going to start taking much higher probability trades, and you will see a massive shift in your profitability. At the end of the day, all the technical analysis in the world won't save you if your mind isn't right. Everything depends on your discipline and your trading mindset. Success in these markets comes down to your trading psychology. If you found value in this video, and if you truly want to know more about mastering your mind, mastering your discipline, and leveling up your trading psychology, make sure you hit that subscribe button. We've got a ton of great videos already on the channel to help you out, so go binge watch those and get your mindset right. Do me a huge favor and smash the like button for the YouTube algorithm. Drop lots of comments down below about what you want to see next. Take care of yourselves, and I'll see you all in the next video. Bye, see you, and take care.